Quick summary first. TCL just unveiled the Note A1 NXTPAPER, an 11.5-inch color paper-like tablet that uses TCL's NXTPAPER Pure LCD at 2200 by 1440 and 120 Hz, paired with the T Pen Pro and on-device AI for things like transcription, handwriting beautification, and organization.
Yep. It swaps e-ink for a color LCD, so you give up the absolute low power of e-ink, but gain full color, a faster refresh, and richer audio and AI features. 8 mics, a 13-megapixel scanner, an 8,000 milliamp hour battery, and 256 gigabytes on board.
Sounds like TCL is aiming squarely at productivity rather than entertainment. But how big of a deal is the AI on the device? This is marketing fluff or genuinely useful on-device capability?
The features they announced, real-time transcription, handwriting beautification, translation, and automated note organization, are exactly the sort of on-device workflows that help people use notes as action items. If the AI runs locally or with strong privacy controls, it'll be more compelling. The trade-off is battery life and reflectivity compared with e-ink, but the 120 Hz display should feel closer to paper with instant responsiveness.
Any concerns about app support? I heard TCL said it runs Android, but didn't confirm Play Store access.
That's the open question. For a productivity tool, access to third-party apps or easy cloud sync, Google Drive or OneDrive matters. TCL is pitching cloud sync options, but if Play Store access is limited, it could constrain integrations. Still, for Note-first users who want fast color and transcription, it's an intriguing alternative to Remarkable or Kindle Scribe.
Nice. It's like trading a candle for a desk lamp. Different light, different use cases. Quick recap. Nvidia closed out an intense 2025 by moving on Groq for roughly $20 billion, a deal analysts call a tech and talent grab that signals a possible strategic shift beyond just selling GPUs.
Correct. Groq's LPU architecture is built for inference, real-time, low-latency model execution, which complements Nvidia's dominance in training with Blackwell GPUs. Bringing Groq's engineers and IP in gives Nvidia options in the inference battleground.
So is this defensive consolidation or the start of Nvidia becoming more of a software and services company?
It's both. Analysts see it as hedging architectural risk. If inference architectures move away from GPUs, Nvidia needs the people and IP to stay relevant. It also positions Nvidia to capture more profitable software and services revenue if model deployment becomes the main moneymaker. But it's expensive and raises regulatory and integration questions.
Any market reaction worth noting? I know investors had mixed feelings.
Stock wobbled a bit. Big acquisitions always trigger scrutiny. Long term, if Nvidia can stitch together training, inference, and tools into a cohesive stack, it strengthens its moat. If not, it's an expensive talent buy. Either way, 2026 will be the year to watch for how this plays out.
A short summary, the handset world keeps moving. Xiaomi may add a fifth model to its 17 series using Snapdragon 8 Elite Gen 5. iQOO may launch an iQOO Ultra focused on gaming, and Motorola teased a Moto X70 Air Pro with periscope zoom and faster charging.
Right. The rumors fit a 2026 pattern. More narrowly targeted flagships, gaming variants with active cooling, and continued camera advances. Periscope lenses, 200-megapixel sensors, and AI imaging that close the gap with top iPhones.
With so many variants, how should buyers choose? Is more segmentation actually helpful?
It depends on what you value. If you're a photographer, look for large sensors and periscope optics. Gamers prioritize sustained performance and cooling. Mainstream users will appreciate balanced battery, software support, and AI features. More SKUs gives choice, but also makes decision fatigue worse.
Any surprises coming from these leaks?
The interesting bits are implementation details, a real active cooling fan in a mainstream phone, or a rotatable zoom ring like we saw from Xiaomi's special editions. Those are niche innovations that could find real fans. Overall, 2025 showed Android flagships matching the iPhone on camera and battery for many use cases. 2026 will be refinement, not revolution.
Briefly, Satya Nadella reshuffled senior leadership at Microsoft and signaled a 2026 plan that aims to expand AI beyond the company's partnership with OpenAI toward practical, human-amplifying systems, stronger data governance, and ROI-focused enterprise deployments.
Yes, the message was pragmatic. 2026 will be messy but transformative. Microsoft is nudging the industry away from model spectacle towards systems that deliver measurable business value, with an emphasis on data governance and safety.
He also flagged workforce impact. Microsoft listed a set of roles that may be affected next year. How should companies balance productivity gains with the social implications?
Companies need transition plans, reskilling programs, clear ROI metrics, and governance frameworks so automation supplements human work rather than abruptly replaces it. Microsoft and vendors are pushing customers to demand accountable AI agents, and that pressure should create better practices industry-wide.
So this is less about flashy demos and more about operational discipline.
Exactly. The next phase of AI adoption will be judged by real outcomes and governance, not just model size. Think fewer fireworks, more steady engineering.
Quick summary. Jim Cramer reiterated his own it, don't trade it mantra, backing long-term positions in names like Apple, Home Depot, Capital One, Goldman Sachs, and pipeline infrastructure for energy exposure.
Cramer's angle is classic. Pick high-quality, obvious winners and hold through noise. He also highlighted Alphabet's progress with Gemini 3 and reiterated conviction on Nvidia and other big tech names.
Is that still good advice in a landscape where AI winners and losers can shift fast?
For most listeners, yes. A focused long-term approach beats frantic trading for most portfolios. The caveat is concentration risk. Stay diversified across sectors. Also, thematic bets like AI need periodic reassessment. Companies that convert AI research into dependable revenue will likely outperform.
So buy the winners, but don't forget a safety net.
Exactly. Own winners, but rebalance, mind valuation, and keep an eye on how AI translates to actual profits. And don't let TikTok hot takes make your portfolio do the cha-cha. The preceding audio summary was created at jesterengine.com, where you can find and verify the original sources.